Welcome back to JRNY TV. Today we are taking a moment to explore one of the most transformative trends in the crypto space, real-world assets, or RWAs. Imagine being able to own a piece of a skyscraper in New York, a barrel of oil, or shares in a private company, all through digital tokens on the blockchain. That is the power of RWAs. By tokenizing tangible assets, we're not just bringing them onto blockchain networks, we are revolutionizing how they're accessed, traded, and owned. So what exactly are RWAs? At their core, RWAs are digital tokens that represent ownership of physical or traditional financial assets. This could be anything from real estate and commodities to equities and bonds. The tokenization process involves converting these real-world assets into blockchain-based tokens, which can then be fractionally owned, traded 24/7, and utilized in DeFi protocols. It's like bringing the physical world's value into the digital realm, unlocking liquidity and accessibility like never before. The implications here are massive. For one, tokenizing RWAs democratizes access to high-value assets that, frankly, were traditionally out of reach for most investors. Instead of needing millions to invest in a luxury property, you could own a fraction of it with just a few $100s, all thanks to blockchain's fractional ownership capabilities. Plus, these tokens can be easily traded on secondary markets, providing liquidity that's often missing in traditional markets. The combination of accessibility, liquidity, and transparency makes RWAs an incredibly exciting development in both the crypto and traditional finance worlds. How do RWAs work? Well, understanding the tokenization process, it can be a little tricky. Now that we've got you covered with what RWAs are, we are going to dive into how they actually work. The magic of tokenized real-world assets actually lies in the process of turning something physical, like a building, a gold bar, or even a contract, into a digital asset that in fact lives on the blockchain. This process is called tokenization, involving taking an asset, assigning it a unique digital representation, a token, and then storing it on a blockchain for trading, ownership tracking, and much more. The key players in this process include asset originators, token issuers, and custodians. Asset originators ensure the underlying asset exists and holds value. This could be a property developer, a gold dealer, or even a company issuing bonds. Then a token issuer creates blockchain-based tokens that represent shares or fractions of this asset. Custodians? Well, they're responsible for holding or securing the real-world asset itself, ensuring its integrity and compliance with legal standards. For example, let's say you want to tokenize a piece of real estate. A custodian, such as a trusted third-party company, then holds on to the title of that property. The token issuer then creates digital tokens that represent fractional ownership of that property. Once those tokens are then on the blockchain, they can be traded, sold, and even utilized as collateral in decentralized finance protocols. This entire process leverages blockchain's immutability and transparency to ensure trust, so that everyone can verify ownership and transaction history in real time. One of the most exciting aspects of this system is its potential to unlock liquidity in traditionally liquid markets. Real estate, for example, is notoriously difficult to sell quickly without significant costs. Well, get ready for it. With tokenization, these assets become tradable on a blockchain marketplace, thus allowing investors to enter or exit positions with ease. It's a win-win for both asset holders looking to unlock value and investors that are seeking to diversify their opportunities. Why are real-world assets such a big deal for investors? Well, for starters, the benefits of tokenization go far beyond the novelty of putting physical assets on a blockchain. Tokenized RWAs open up new doors for accessibility, liquidity, and even efficiency that were previously unimaginable in traditional finance. Whether you're a retail investor or an institution, RWAs are reshaping how you and I can interact with and benefit from tangible assets. One of these standout advantages is fractional ownership. Traditionally, investing in assets like real estate, luxury goods, or commodities, just to name a few, required significant upfront capital, often limiting these opportunities to high net worth individuals or institutions. But with RWAs, anyone can purchase a fraction of an asset, thus lowering the barrier to entry and democratizing access to wealth building opportunities. Want to own a slice of a high-value property in London? Who wouldn't? Tokenized real estate makes it possible, even if you only have $100 to invest. Another game changer is liquidity. Many real-world assets like real estate or private equity are illiquid, meaning that they are hard to buy or sell quickly. Tokenization solves this by enabling 24/7 trading on blockchain platforms, thus allowing investors to easily enter or exit their positions. You're no longer locked into long holding periods or at the mercy of slow, outdated financial systems. In fact, blockchain's transparency, it plays a crucial role as everyone can verify ownership or transaction history instantly, adding a layer of trust that's often lacking in traditional markets. Lastly, there is the potential for yield generation. In addition to holding tokenized assets, investors can leverage them within decentralized finance protocols. For instance, you could stake your tokenized real estate to earn passive income, or utilize it as collateral to secure your loan. This integration between RWAs and DeFi creates a whole new dimension of utility, making your assets work harder for you, whether it's easier to access, faster liquidity, or added earning potential. RWAs are redefining what's possible for investors that are in the digital age. While tokenized real-world assets offer exciting opportunities, they're not without risks. As with any emerging technology, please understand that there are challenges and, of course, uncertainties that investors should be aware of before diving in. Understanding these risks is crucial for making informed decisions and maximizing the potential benefits of RWAs while minimizing exposure to pitfalls. One of the most significant risks revolves around, well, let's say it, the pink elephant in the room: regulatory uncertainty. Since RWAs blend traditional finance with blockchain technology, they exist in what's called a gray area of regulation. Laws governing securities, ownership rights, and taxation vary widely across jurisdictions, and tokenized assets often face scrutiny from many regulators. There's also that small little risk of a project that could become non-compliant with changing laws, which might result in assets being frozen or even platforms being shut down. For investors, keeping an eye on the regulatory landscape and choosing compliant platforms is essential. Another concern is counterparty risk, specifically with custodians and token issuers. When you purchase a tokenized asset, you're often relying on a third-party custodian to securely hold the underlying asset and on the issuer to maintain the token's value. If the custodian mismanages the asset, or if the token issuer fails to deliver on their promises, the value of your investment could be jeopardized. This highlights the importance of due diligence. Research the reputation, the community, the legal structure, and transparency of the platforms that you are investing in. Finally, there is the issue of market volatility and liquidity risks. While tokenized assets aim to improve liquidity, smaller or niche markets may struggle with low trading volume. This can lead to price volatility or difficulty exiting a position when needed. Additionally, RWAs do not eliminate the risks inherent to the underlying assets themselves. For instance, tokenized real estate still depends on property market trends, while tokenized commodities like gold, they are subject to global economic shifts. Despite these risks, RWAs are rapidly evolving, and many platforms are actively working to address these challenges. By understanding the potential pitfalls and taking active steps to mitigate them, such as diversifying investments and choosing reputable platforms, you can better navigate the exciting but yet complex world of tokenized real-world assets. Now that we've uncovered the benefits and the risks of RWAs, let's take a look at some of the platforms that are spearheading this movement. These projects are paving the way for tokenized assets by building the infrastructure, creating marketplaces, and ensuring compliance, thus making it easier than ever before for both institutional and retail investors alike to access RWAs. One of the most prominent names in the space is Centrifuge, a platform designed to bring real-world assets like invoices, real estate, and supply chain financing, just to name a few, onto the blockchain. Centrifuge allows businesses to tokenize their assets and utilize them for collateral for decentralized finance lending. This approach provides liquidity to businesses while offering DeFi investors access to yield opportunities backed by real-world value. It's a win-win scenario that exemplifies how blockchain and RWAs can harmoniously work together. Platforms like Ondo Finance and Maple Finance are also leading the charge. Ondo Finance specializes in creating tokenized funds, allowing investors to yield-generating strategies tied to real-world assets like bonds and equities, just to name a few. Meanwhile, Maple Finance focuses on decentralized lending by offering loans that are backed by tokenized RWAs, catering to institutions that are seeking liquidity. These platforms highlight the diversity of use cases within the RWA space and the growing demand for blockchain solutions in traditional financial markets. Finally, there is Chainlink. Chainlink is a critical player providing the infrastructure for RWAs to thrive. Chainlink's Oracle technology ensures tokenized assets are accurately priced and that off-chain data is securely brought on-chain. This level of reliability is essential for RWAs as it ensures transparency and trust in a space that bridges physical assets with the digital world. As these platforms grow and mature, they're setting the stage for RWAs to become a dominant force in crypto. Whether it's tokenizing real estate, enabling DeFi lending, or offering new investment opportunities, these projects are at the forefront of the RWA revolution. Real-world assets are more than just a trend. They in fact represent a pivotal movement for the convergence of blockchain and traditional finance. By bridging the gap between tangible assets and decentralized systems, RWAs have the potential to revolutionize how value is transferred, stored, and then accessed all across the globe. This is more about making finance more efficient. It's about making it more inclusive and accessible for everyone. One of the most compelling aspects of RWAs is their ability to bring legitimacy and stability to the crypto ecosystem. For years, critics have labeled cryptocurrencies as speculative or disconnected from real-world value. Well, RWAs directly counter that narrative by tying blockchain to physical, measurable assets like real estate, commodities, and even bonds. This not only boosts investor confidence, but also attracts institutions, which are drawn to the prospect of tokenizing their existing assets to unlock new liquidity and efficiency. RWAs also play a critical role in scaling decentralized finance beyond the confines of crypto-native assets. By incorporating tokenized real-world assets, DeFi protocols can offer more diverse, yield-generating opportunities while appealing to a broader audience of traditional investors. Imagine a future where your mortgage, your retirement account, or business loan, maybe even all of the above, is entirely managed through decentralized systems. RWAs are helping make this vision a tangible reality. Looking ahead, the adoption of RWAs could fundamentally change how we think about ownership, investment, and markets. From creating global 24/7 marketplaces to illiquid assets to enabling fractionalized investments that are accessible to anyone. With an internet connection, the possibilities are truly endless. This is the future of finance, where barriers, they're lowered. Inefficiencies, they are removed, and opportunities, they're available for all. And that wraps up our deep dive into real-world assets and their game-changing potential in crypto. If you've made it this far, you're now equipped with a solid understanding of what RWAs are, how they work, and why they are so critical to the blockchain landscape throughout 2025. From tokenizing real estate to creating liquidity in traditional finance, RWAs are redefining the possibilities of decentralized technology. If you found this video helpful, be sure to smash that like button. It helps us reach more people like you and keeps us more motivated to bring you more top-tier content like this. Don't forget to hit subscribe and turn on the notification bell so you never miss an update or our next video. We cover everything from the latest crypto trends to in-depth explorations of transformative projects like RWAs. If you have questions about tokenized real-world assets, or maybe you want to share your thoughts, drop a comment below. We'd love to hear your perspective, and who knows, you might just inspire a future episode. Thanks for tuning in, and we will catch you in the next one.